So markets are proving once again that they got ahead of themselves. I'm sure a lot of you guys have already heard the news. For those that didn't, supposedly the treaty, or pretty much the ceasefire between Iran and Israel, is not something that is actually fully being respected by either two of those countries. Now, this shouldn't be much of a surprise based off of the response that we saw from Trump yesterday. I'm not saying this is Trump's fault at all, right? Again, those are two independent countries. I'm not putting blame at him by any means. With that being said, it's the stock market's fault. The stock market is getting ahead of itself. The part that baffles me, and I had this conversation today with my LPP team, right? Like, let's just use common sense. The NASDAQ market did not sell off when Iran and Israel were attacking one another, right? We traded sideways. Even when the US attacked Iran over that weekend, the markets closed the following Monday in the green that Monday. So the markets did not sell off when the conflict was going on, when it started, and even when we attacked. But when they announced a ceasefire, now that is bullish for the market, because as soon as that ceasefire happened, markets push up to new highs. This is the part that is so insane about the market, and I just want you to see it, is that if you look at our inflation rate, if you look at our unemployment rate, if you look at our most recent GDP report, if you look at the bond market, if you look at just the housing market, I would love to see what overall economic report shows and showcases that our economy is thriving. Not the stock market, not an individual company, but like as Americans, right, our overall economy. Show me something that supports that, yes, we are headed in the right direction. We are $37 trillion in debt. The U.S. still doesn't want to refinance its debt because interest rates are too high, and the Federal Reserve, as of right now, has no expectation to cut rates because it's data dependent. The data does not support a rate cut just yet. Now, the part that I found to be really interesting was a comment that was made by Vice President J.D. Vance slams Jerome Powell, right? He's like, I'd love to hear an argument for why Jerome Powell cuts rates 50 basis points right before the election, but can't do it now with inflation lower. First off, if we take into consideration before the election to now, I mean, we're at 2.4% before, we're at 2.4% now. The whole point is that we're at a 2% target, and that if we're not headed in the right direction and actually showing signs of progress, of our inflation going down, of our unemployment going down, why would he support the case of cutting rates, right? He's made it very clear from the beginning. It is all data dependent. And if data does not support a rate cut, they will not cut rates. Like, it's common sense when you pay attention to what it is that Jerome Powell's saying. I'm not here to say it's right or wrong or the way that he's doing things. He's doing his job that he was hired to do, right? But it's not like you don't understand why he's not doing it. They cut rates. We were at a specific inflation rate then. We're still at that same inflation rate now. There's been no progress. So therefore, if we begin to cut rates, they could possibly boost spending. And by boosting spending, it could cause our inflation rate to begin to go up. So why would we begin to cut rates when inflation is not going down? The whole point of cutting rates is because our economy can support it. But again, the only reason that JD and Trump want the Fed to cut rates is because it's in the United States or the Trump administration's best interest so they can refinance its debt. And this is not even taken into consideration the tariffs that have not really even been factored into the inflation report, yet alone the increased energy and oil prices that we are still yet to see be relayed into our inflation rate, right? Because it all takes time. The stock market reacts instantly. These reports take time to actually come out. The month has to complete itself, and then it gets reported on the following month. So it's going to be very interesting to see in the months that follow to see if our inflation continues to go down, because then I would agree. If inflation continues to go down, it could support the case of, yeah, maybe we can, continue to cut rates. But if we begin to see inflation go up, why would we begin to cut rates in the sense of trying to boost our economy when we already see that inflation is already headed in the wrong direction? I mean, there was a most recent report that was released of the number of homes for sale is currently finally rising. Buyers aren't interested. So nearly 500,000 homes. So home sellers are outnumbered by buyers by nearly 500,000. These are the number of sellers, way more than the number of buyers. It's a simple supply and demand issue, right? Where there is less of an incentive right now to buy a house. Why? Because the 10-year treasury. The 10-year treasury is the benchmark on taking out a mortgage. And the 10-year treasury is very high. And therefore, mortgages are very high. So why would anyone want to take out, or I wouldn't say why would anyone, it's not like it's cheap or it's inexpensive to buy a home right now. In most of America, it is cheaper to rent than it is to own because, again, of how expensive it is to take out a mortgage. That's not the Federal Reserve's fault. That's our government's fault, right? That's the whole point of the Federal Reserve is that they're independent. So just because we hope that it's in our best interest or the current administration's best interest is besides the point. If we wanted to raise tariffs and we knew that it was inflationary, then we should have been cautious about that. We can't do something and then not be willing to accept the consequences, right? We all knew that when Trump was voted into office, tariffs were going to be a part of it. But again, the stigma that it wasn't inflationary was something that was, for the first time ever, being presented. I've never heard that tariffs do not cause inflation. It's literally common sense. If you increase the price or therefore charge, another country import prices, these companies that are importing it, that are most likely US-based companies, are going to have to pay that import tax. Therefore, their costs are going to go up, and that cost gets passed down to the consumer. Simple math, common sense. Now, again, in a market full of chaos, I guess common sense isn't so common. But as of right now, NASDAQ market going from way in the green to now pulling on back on the 5-minute time frame. I think you could see the beautiful setup we have going on, and we'll see if things continue to develop on the upside or if they actually break support and begin to pull on back. I do want to remind you, markets have been incredibly bullish for no reason. So again, they've been incredibly irrational. So we can't be surprised if they continue to be incredibly irrational. The reason I'm sharing this is, again, markets can stay resilient, right? But if we do get that break of support, I would love to see that break of support and then the retracement right back down to previous support range, right around 520 to 530 per share for QQQ. So very excited to follow up. I think that most of us can agree that the market is due for that pullback as markets have not earned the recovery. Trade agreements are not signed. Tensions in the Middle East are still very much present, and our economy simply is not growing. You guys let me know down in the comment section what you think. Hope to see you for our live trading session. If you want to tune on in tomorrow, second link down below. Take care, team.